Hey guys, welcome to Million Note. This is in reference to AMC stock movement. Charles Payne is speaking to a few analysts on Fox News and talk about what's happening with AMC and GME stocks. He also speaks about what hedge funds are thinking about. Let's have a look.
And I got an email that kind of really pumped me up on Tuesday. It came from someone who's a subscriber and uses my educational services. He said he went from $120,000 to a high of $1.2 million in less than a year. I have yet to cash out any stocks except for the 10% profit designated for Christmas donations. The funds I am working with are in my 401k trading account. The book is wonderful, but a new chapter needs to be added. How to take advantage of hedge funds when they try to run a company out of business by shorting it out of existence. Now, you know, the email speaks of taking action, right? It speaks of diamond hands. Obviously, it speaks of trying to level the playing field. What made you focus in on the market, particularly on these AMC and GameStop, those kind of stocks?
Well, honestly, I didn't really know what I was getting myself into when I first decided to invest in AMC. I did know about what happened with GameStop, and I guess I didn't want to see the same thing happen with a movie theater company. I love the movies. My family loves the movies. I didn't want to see them, be pushed down. I didn't want to see them, especially during the pandemic.
Thank you, Charles. From the Moon Platoon, the Andrew Money community, I really appreciate you having us on. It is a story of when people take a look at obvious injustice, when people take a look at companies that have been growing up with them alongside their childhoods and now giving back to that exact same company, GameStop and AMC. There are 4.1 million apes holding the float for a reason on AMC's side. So, I
mean, almost every single day in the financial media, you're called dumb. Today, the ape community was blamed for the broad market, a $36 trillion market. They blamed you for it being down today. I mean, how does that make you feel?
I mean, it just makes me feel even more excited. It's just more attention on the movement, to be honest. I feel like I feel like there are plenty of people who still trust, what they're hearing, but there are a lot more people who are seeing things the other way now. They're seeing things for what they really are. They know that this wasn't caused by us. They're starting to, realize what's really going on.
Congratulations. And you're right. Listen, I'm working on another book, and I've got a whole chapter in Diamond Hands, and it features Warren Buffett. That is the definition of investing. FINRA is taking public comment on short reporting and short sales. Apes and everyone else, if you're seeking fairness, you must make your voice heard. It's regulatory notice 2119, I'll post the link on Twitter at CV Payne. Good luck to everyone. Now remember, the big names in the Dow will probably keep you rich, but if you want to make it and become rich and not take maybe 30 or 40 years to get there, you have to think outside the box. I'm going to bring in Strategic Wealth Partners, Mark Tepper, because Mark, you always come up with unique names. And before I even ask you for some, let's try to help the audience a little bit. So how does someone even go about looking beyond the major indices for ideas?
Look, so Charles, it's very rare you hit a home run off a name everyone knows. So you got to keep your antenna up. You got to keep an ear to the ground. Because a lot of these under-the-radar companies, as you know, they have little or maybe even zero institutional coverage. So the first thing is you got to source the name or idea. Second thing is you got to do your research. And Charles, when it comes to sourcing names, don't overlook the power of social media. We've all seen what Reddit can do, Twitter, maybe join a stock group, preferably one that maybe is a pay-to-play and private group. I think you can get some good ideas there. And then you got to do your homework, So once you get the idea, you got to get the investor kit. You got to watch some YouTube videos to learn about the company, their product, their service. You got to do a heck of a lot more work than buying a Facebook or an Apple,
Today, the number one stock in all the market, the entire market, is a company called B Square. It's up 175%. I'm in it. My subscribers are in the stock, and we're down. Okay? So the reason I bring it up is sometimes you can find a grand slam up 184% today, and we're still about 50 cents short, and be early. How do you deal with something like that?
Charles, it happens to us all the time. Full transparency, man. It happens to the best of us. Look, we fall in love with a company, management team, growth story, and as soon as you get in, it's weird, but all of a sudden the price action is a complete dud, So look, you got to enter every position with an exit strategy. Sometimes bail on it and come back later.
So I'm bringing in author of The War of Small Business and recovering investment banker, Carol Roth. Carol, I want you to check out the headline. Meme stock hype can deter women from investing. I mean, this article does all kinds of twists and turns to sort of connect low representation of women and blacks and Hispanics in the financial world.
So by them casting the retail revolution as exclusionary seems like one of the biggest self-owns of all time from my perspective. It seems that they're not understanding that these these retail investors are using memes, they're using humor, they're using communication in order to be inclusive. That's what this entire movement is about. It's about bringing more people in and having more people participate in wealth creation opportunities, regardless of race, background, sex, or creed. That should be celebrated, not denigrated, Charles.
Says, quote, I worry a young woman reading the meme stock coverage can conclude either that she is no match for the hype trader and or that she has no interest in working in an industry dominated by this personality type. What the hell are they talking about?
Let me go paint my nails, Charles. No, as a woman who has been in the industry for more than a quarter of a century, like I am appalled and embarrassed by this.
Yeah, and of course, like all these Financial Times articles, they call them day traders. Again, I think that's sort of a reference to, oh, don't day trade. Remember what happened in 2000. Now, another article talked about how much the shorts have lost, down $12 billion, and how the hedge funds are trying to find ways to monitor these websites and these discords. I just think it's so interesting that there's this focus of the industry on how to beat the individual investor.